Sometimes we trip over a dollar to pick up a dime.
Yes.
And so what are your recommendations right now for the fourth quarter of 2025? If you're sitting across an investor, you sit across a lot of people every day. What is your advice at this point?
Well, before I give advice, I would have to understand at a very high level what their goals are, because investors invest for different reasons. Some are really attracted to the cash flow. Others are attracted to depreciation and appreciation over time. Is it a tax move? What's your product? Are you going single family? Are you going multifamily? There is such a myriad of decisions to make. So getting acutely aware of your goal and your why is important. I think too many investors miss that. If you don't know what your business plan is for investment, you do run the risk of making bigger mistakes. So that being said, if they have their goals set forth, I would simply advise that they have somebody with a set of strong negotiation skills, someone who understands the market, who has access to off-market properties in a way that's appropriate, so that they can have every single opportunity set in front of them. Someone that can find those properties or help them in equipping them to find them themselves, and then to have somebody, an accountability person that is going to run numbers and help them make a decision that is mathematical and not emotional going into the rest of the year. Because the truth is, there's tons of opportunity. There's still lots and lots of opportunity.
And we agree. Please follow the rules when you are accessing off-market properties. The Investor Tribe, we follow the rules. There are rules in the state of Kentucky. Please follow the rules of your state in your location on accessing property and the purchase and sale of any real estate.
But I also heard, importance of, building a team or having an accountability partner, having a tribe around you to run numbers, to get questions answered, to maybe learn from their experiences, or whether they're horror stories or success stories. There's a bit of both in real estate. It's not all roses and rainbows. There's ugly houses with abandoned cats and stinky carpets. That was my week last week.
Sure.
But it should come out fine on the end. So those stinky carpets smell like money. That's what a lot of investors say.
They do, yeah.
But it's just part of investing.
Well, there's a model that mitigates that risk. There's a model to follow, and you listen by people who have done it before you, pros like those in Investor Tribe. And when you listen and learn and you're willing to make a decision that has no emotion attached to it, odds are you're going to find more success in investing.
We love that. And so what we want to do is kind of bring it right back in before we close out. And we want you to kind of give us again a prediction. So last time,
where's that magic came off?
Where's that magic? We need to find, we forgot to bring it this time. And so, but what we want to know from you is just, what do you see the market in the next, I would say 3 to 6 months? What do you see going on in the market? So, and we're going to have you back. So we just wanted to get,
as long as she gets it right.
It's a right. That's that right. She'll be wanting to come back, but not right. But if it's all off, then she won't answer our calls. No,
right. Well, nobody predicts the future. I've gone through that before. It's my joke. But however, there are indicators, and you should always be looking historically and understand what is probably going to happen. I do that every single day. In fact, I'm teaching a class tomorrow to our agents on just that. And here's what's expected based on what we know and based on the historical data, is that we have a slight rise in inventory. We still have, at least in the Louisville area markets, we still have a seller's market, meaning there are more buyers. There's still a significant demand. And the feds are talking about some rate reductions. Now, remember, the Fed's reduction is not a complete predictor of what the mortgage rate is going to do. That's really important to understand, that it's definitely an indicator, definitely a suggestion. And there are a lot of signs pointing towards that direction. So given the slow rise in inventory and the pent-up demand of the buyers, if we shake that rate down, even at what Alyssa is calling, no one else is calling this, by the way, the psychological rate reduction to make people feel safer about moving forward in the cost of today's money, we're going to see more buyer transactions. We're going to see an interesting uptick in movement. In other words, real estate agents for so many years have been used to the seasonality of the real estate market, meaning it's low in January, it rises through the summer, it falls back with a little bump in October, and then it goes back down and it cycles again. Since COVID, and since all of these unprecedented rates and situations and economic conditions have happened, our seasonality is just not true anymore. So I don't think that we're going to see the downshift, and there's suggestion that we'll see an upshift. Now, that won't happen if the government looks at our current unemployment, because right now we have a stagnation in the economy, which is not a healthy situation to have.
Can you speak and define stagnation for our audience?
I absolutely will. We've got interest rates that are elevated, and we have jobs. Unemployment is rising. Okay. The government does not want the rates to be too high, and they want people to be working, and you can't fix both at the same time. So the government's going to have to figure out which lever they're going to pull. When they're both going in the direction that they are, and they are, that is a very big problem for our democracy. We have to sit back and wait to see what decision they're going to make. And if the rates float down, we're going to be selling more houses. If they don't, we've got a different